Thanks for taking the time to listen to this video titled The Pros and Cons of Paying Loan Points. One loan point or discount point is 1% of the loan amount. So for our purposes here, we'll be dealing with a $400,000 mortgage. So in that case, 1 point is $4,000. One loan origination fee on a $400,000 loan is also $4,000. This money is paid directly out of pocket by the consumer to the bank, lender, or broker that they're obtaining financing from. The purpose of this money is to influence the interest rate so that the consumer receives a more competitive rate. Here's an example. Let's say that the lowest quotable rate by the lender is 5%. They're quoting you 5% and charging you a total of 2 points, one loan discount point and one loan origination fee. For our purposes here, that would total $8,000 in fees paid out of pocket by the consumer to receive 5%. But now you state to the lender that you only want to spend 1 point and you want to save yourself $4,000 in fees. The lender may then buy the interest rate up by approximately 0.25%, because the relationship between loan discount points and the interest that the consumer receives is approximately 0.25% in interest for every point paid. So if you paid one less point, the lender then might quote you instead of 5.25%. But now you decide you want to save all of your money and you don't want to spend 1 point or one loan origination fee, and you want to see a quote that's reflective of absolutely no points. In that case, the lender might buy the rate up yet again by approximately 0.25%, and you would receive 5.5% and save $8,000 in fees. But now you decide that you like the payment associated with the 5.25% interest rate. So you decide to spend 1 point, or in our purposes here, $4,000 to influence the interest rate. On a $400,000 mortgage, 0.25% savings on your mortgage loan on your monthly payment is approximately $83 per month. So by spending $4,000 in fees to obtain 5.25%, you just saved $83 per month on your mortgage payment. It will take you approximately 48 months or 4 years before this monthly savings equals the $4,000 that you've spent in order to save that amount of money. Does that make sense? That's really a personal decision, because you need to decide how long you're going to be in this mortgage loan. If you feel that you're only going to be in this mortgage loan for a very short time, prior to 4 years as an example, it may not make sense to spend $4,000 in order to receive a more competitive rate. It might make more sense for you to spend absolutely no points and take a slightly higher interest rate. On the other hand, depending on the market movements and what you think interest rates may do, you may feel that possibly even spending 2 points makes sense for you. It's really a personal decision, but you have to understand a couple of things. 1 point is influencing your interest rate by approximately 0.25%, and if you prefer to save this money and not influence the interest rate accordingly, you can. You simply ask the lender for a 0-point quote, no discount points and no loan origination fee. I hope this information has been helpful for you. If you have any additional questions, because you have access to this information, we'll answer your emails, and we'd love to hear from you. Thanks again.